Is Tesla's era of dominance coming to an end? China automaker BYD is poised to overtake Elon Musk and company in total all-electric vehicle sales by year's end, as competition in the EV market heats up worldwide. On this episode of Growth Stories, we take a look at how BYD is challenging Tesla for the top spot in the electric vehicle landscape, and what the rivalry says about the broader China EV market. Tesla and BYD are the world's largest electric vehicle makers, and the competition between the two rivals is getting tighter. While BYD raced ahead of Tesla in total EV production last year, the Austin, Texas-based company has retained the crown as the top seller of all electric vehicles. But that's about to change. A disappointing second quarter report in July for Tesla has opened the door for BYD to seize the top spot in the all-electric car market.
BYD is growing much faster than Tesla, growing much faster than just about any automaker.
That's IBD News editor Ed Carson. He's our resident electric vehicle expert. He says BYD's rapid growth has caught the attention of both consumers and investors. Warren Buffett's Berkshire Hathaway has been a longtime investor in BYD, and Cathie Wood's ARK Invest Fund has also traded the Chinese automaker. BYD's pivot from cell phone battery maker to an EV colossus has been nothing short of astonishing. In the span of 5 years, BYD has seen sales of its electric and hybrid cars surge from 200,000 in 2017 to roughly 1.9 million last year. Tesla saw a similar track, with deliveries growing from 103,000 in 2017 to 1.3 million vehicles in 2022. Carson says one advantage BYD enjoys over Tesla is its extensive vehicle lineup.
Tesla makes 4 vehicles, and basically the vast majority is the Model 3 and Model Y, and the vast majority of that is the Model Y. So they're almost a one-vehicle car. They're not just, but pretty close to it.
BYD's vehicle mix is more than 5 times what Tesla offers, with price points that span across the economy and luxury markets. The China automaker also produces electric buses, vans, and trucks.
BYD makes vehicles from just under 11,000 all the way to 150,000. So yeah, a lot of their vehicles are cheap, but they have a huge lineup that continues to expand. They compete directly against Tesla, but they're above, they're below, they're in different segments. I think that's something that really is giving them an advantage to grow in areas that Tesla can't grow, because Tesla's not in some of those other markets.
One thing that really puts them in a different category compared to other companies is how vertically integrated BYD is.
That's Ilaria Mazzocco. She's a senior fellow in Chinese business and economics at the Center for Strategic and International Studies. She says BYD's background in battery making has been crucial to its ascent in the EV market.
They actually started as a battery manufacturer rather than as a car manufacturer. I think that has given them a real advantage when it comes to really reducing costs and capturing a lot of the value added that comes from the battery, which is, of course, the biggest component for EVs.
But she adds that BYD's success reflects the rise of the broader China EV market.
I think BYD's rise is also representative of the success of EVs in China, which of course is the largest automotive market in the world, and now increasingly internationally.
China's government has played a key role in making the country the largest EV market in the world. Consider this statistic. Since 2020, the number of EVs sold annually in China rose from 1.3 million to 6.8 million in 2022. That's more than 8 times the amount of electric vehicles sold in the US last year.
We want to keep in mind that this was definitely something that the Chinese government pushed and was definitely seen as a way to help the industry, but there were varieties of tools that were deployed and continue to be deployed. So one big one, and perhaps the most visible one, were subsidies aimed at reducing the prices for consumers, right? Similar to tax credits that are now available in the United States or other types of policies that we see in Europe, for example.
She adds Chinese regulators also focused on policies that made it easier for people to get cars, like issuing more license plates and providing sales tax exemptions to consumers who bought electric vehicles.
It's just worth noting that the Chinese system as a whole is structured so as to incentivize manufacturing. So there just tends to be a lot of support of various kinds for manufacturers throughout the Chinese system, at the central level, at the local level, and that has definitely been very important for the EV sector as well.
But generous government policies haven't just benefited Chinese companies. They've also extended to Western automakers like Tesla.
So I think that's just very important to keep in mind. It's not just BYD that we're talking about. It's also Western manufacturers, and I think in particular one Western manufacturer that is really exploiting that advantage and that manufacturing capacity that it has in China.
That's Ilaria Mazzocco again. This year, China surpassed Japan to become the world's largest automotive exporter. Chinese car companies like BYD account for half of total vehicle exports from the country. But what might surprise you is that through the first third of the year, Tesla accounted for 40% of China's total vehicle exports. Tesla was also a big beneficiary of Chinese government subsidies. The Elon Musk-led company was aggressively courted by the city of Shanghai to build a production facility in the region. In just over a year, a 214-acre plot of dirt was transformed into a new Tesla gigafactory. Tesla's Shanghai plant now produces the most EVs in the world and is a critical supply chain hub for the automaker. And earlier this year, the company submitted plans to expand manufacturing capacity to meet global demand.
Demand internationally for EVs continues to grow. Chinese companies are the best placed at the moment to provide those products to consumers globally.
In January, Tesla slashed prices on its vehicles, sparking a price war in the EV sector. China automakers responded in turn by lowering their prices and cutting production to boost demand.
They have to keep on boosting demand, and demand has risen in 2023, but they've had to slash prices to do it.
That's IBD News editor Ed Carson again. He says that while Tesla is better positioned to absorb these cuts in the near term, cheaper sales prices have started to gnaw at the EV makers' profit margins.
There's a limit to how much more they can grow. I mean, it's incremental growth that they can get, whereas BYD, they're just introducing a bunch of models, so they can get to that whole range of vehicles and hit a lot of places that it's harder for Tesla to at its price levels.
Mazzocco says the EV price wars have also pressed automakers to look for growth in markets outside of China.
And in China, the market is extremely competitive right now. So there's a lot of pressure on these automakers to go abroad. There's a lot of demand internationally. And in many cases, these manufacturers are able to provide relatively lower cost vehicles.
And Chinese-based automakers are producing and shipping a lot of electric vehicles. In 2022, China's EV exports climbed 120% over the previous year. And those numbers are trending higher. Both Tesla and BYD are looking to expand their presence in Latin America and other Asian markets like Thailand. And Europe is a key driver of growth for the two EV makers. But Mazzocco says global expansion has the potential to ignite trade tensions. Lawmakers have already taken steps in the US to curb China's growing auto industry with the Inflation Reduction Act. The 2022 bill prohibits the use of EV tax credits on cars that have components or materials sourced from China. And in October, the European Commission said it would investigate China's subsidy advantage. Their findings could shake up the global EV industry and lead to increased tariffs on imported Chinese vehicles.
This is a very direct threat to a very important industry for a lot of countries, especially industrialized developed countries. And so I think it really is going to be very challenging. And I think what we're going to see is more and more incentives for Chinese automakers to localize production.
But can China automakers keep their cost advantage as they expand overseas?
That's $1 million question, really. But I think there's no reason why in the long term, these costs cannot be reproduced, even by non-Chinese companies, essentially, right? This is mostly a sort of supply chain advantage.
And while BYD and Tesla continue to battle it out in the global EV market, there seems to be a clear favorite among investors. Though Tesla's profits have decelerated over the last 4 quarters, shares have more than doubled since the start of the year.
People are obviously not just valuing Tesla on its profits, which are struggling. They're betting that they'll have rapid growth again, maybe not just from the Cybertruck, but from self-driving, from various AI things. And so that's part of it. But strictly looking at the EVs and stuff, the gap is narrowing quite a bit.
BYD stock has yet to make a similar move. Carson says that's partly because BYD only trades over the counter in the US, meaning it's not listed on any major American exchange. Uncertainty over China's economy could also be putting pressure on shares. But what is clear is that BYD will be a force to contend with as the EV market continues to grow.
BYD is likely to be the leader in total sales over the next couple of years. We'll see from there. I mean, Tesla could come back, somebody else could come in, but I think that's the picture we're looking at over the next couple of years.